twist then. Let's talk about Bikaji Foods and talk about what the earnings have been like for Bikaji Foods. Largely inline set of numbers coming in for Bikaji Foods all across the board. Let's get into a conversation with Mr. Manoj Verma, the COO, and Mr. Rishabh Jain, the CFO of Bikaji Foods International. Let me begin with you, Mr. Verma. Talk to us about how the quarter has shaped up for you, largely inline. But this time around, the growth was largely driven by your ethnic snacks portfolio, whose share in the overall revenue pie has also gone up. How instrumental have the GST cuts been over here, and what kind of growth are you penciling in for this segment in FY27?
Yeah, good afternoon and thank you for the getting us on this channel. On quarter three results, if we look at, I think it's been overwhelming result in terms of ethnic snack and overall snacking category if we look at, right? Overall growth look little muted. This is on the back of festive seasons, which is sweets and gifting. So when you have early Diwali, so quarter two becomes big, and when it's a delayed Diwali, then it's quarter three, which becomes big. So this time it was quarter two, which was big on sweets and gifting, hence this start. Talking on the GST, the reflection and the positive movement, certainly yes. I think after many, many quarters, this is the quarter wherein if you look at the volume growth and the value growth are in line. Otherwise, there's always been a lead lag of about 4-5%. So I think that's the benefit which the GST correction or reduction has given to the category and to us as well.
Okay, and with regard to packaged sweets, give us a sense. It's declined largely because of seasonality. Has demand normalized post Diwali, and do you expect a recovery at some point?
So it's always good to see our business for packaged sweets quarter two and quarter three put together, which is in line with our plan, what we had. And you will see, quarter four again, in line with the growth what we are getting in that. So there's, I think, calling it a decline would not be a right term. Here it is just seasonality, and the rest is everything in line.
Okay, and shifting focus, Mr. Jain, let's talk about the growth outlook. The company is targeting double-digit volume growth, which is coming at roughly 8.4% this quarter for the core business. Any idea on when those kind of volumes will be achieved, the double-digit growth guidance?
So quarter four onwards, you will see that double-digit growth should come in.
Okay, so quarter four, that's the outlook, and we're going to be watching out for that as well. But Mr. Verma, talk to us about the ratio between the family to impulse mix. How is that shaped up in quarter three, and what is the ideal mix between these two categories that you're targeting?
So normally, our mix is 60-40, 60 is family and 40% is the impulse pack. In quarter three, if you look at the family looks weak. The reason again is that when sweets are low, sweets is primarily all large pack only. So therefore, this mix looks low. But going forward, we will end up somewhere around 58-42 kind of a ratio. That's what it is. And the end state, what we are aspiring for, that 55% to be the large pack and 45 the small pack.
Rishabh, let me come to you. Margins, they've come off, right? And when I'm looking at it, YOI, of course, there was a very low base, so I'm not sure whether that was comparable. Talk to us about where margins go in the medium term. Does it hit mid-teens again? Is that something that you're looking to do?
So from margin perspective, we'll see a gross margin is close to 34.5-35%, which was in line with what we have planned for. And of course, last quarter three of last year was very tough because edible oil price was very high. But overall, in last 2-3 quarters, we've done a reasonably good job. And from EBITDA perspective, this quarter three is always big on marketing cost, which is we invested close to 4% of our overall revenue in marketing in quarter three. So quarter four and next year onward, normally our target is to be at least 14.5% EBITDA, and we are on track to achieve the same.
So what's been the concern? Raw material prices are fairly stable, right? So what's been the concern on the margin count? Why has it come at 12 if your gross margins are there? What's really impacted EBITDA? Are you pushing on advertising, sales promotion? What exactly are you doing?
Yeah, so quarter three is always big on advertisement. So we invested 4%. So that has impacted EBITDA from that sense. If we Our normalized yearly EBITDA ad cost is close to 2%, but quarter three is the highest. So that has impacted EBITDA in quarter three.
Okay. Your core states, talk to us about the growth there, and what's the progress with regard to non-core, or rather emerging, if I can call it that. Talk to us about the growth progress there, Rishabh.
So from core and focus market perspective, what we're seeing that our core market should grow at least 12-13% year on year. And that's in line with what we're planning in quarter four as well as next year. And focus market where we're doing all the investment, be it in people, plants, and everywhere. So this should go at between 70 to 20%. And that's a plan we are doing, targeting for next 4 to 6 quarters.
Okay. And Mr. Verma, talk to us about the newest foray by the company. You've recently forayed into the frozen and premium bakery products via a joint venture. How does this foray fit into your long-term strategy, and what is the timeline on this segment being fully operational?
So bakery, I mean, this investment is a futuristic investment which we have initiated, and this would be a premium bakery only. Three parts of it: one is premium breads, second would be grocery, and third the cakes. This would be three line of business. And if we look at in terms of where to sell, it will be primarily exports because this would be frozen stuff. Then B2B within India or domestic, and on top end stores in domestic as well. That's how we are looking at it. It is just the beginning, and we would be, commissioning the factory or start billing by end of this year or the quarter.
Mr. Verma, this tie-up that you have with Costco, first off, give us some background on it, and what's the kind of progress you are seeing? Because it could start to add significant traction to your numbers. Is that something one can expect?
So that's the endeavor, which is what we actually want to make it happen. So it is, as we have started, we have got good response, engaged with Costco team, and there are repeats coming in. So the success, how we measure is that what we sell, is it getting all offloaded or offtake uh, follows or not. So thus far we have got very positive stuff. So which means that this business should be sustained and should grow going forward.
Okay. And lastly, Mr. Jain, the retail business, as we understand, has also started to begin meaningfully to the business. What is the current store footprint, unit economics, and of course the medium-term strategy?
So we invested in the hazelnut factory last year, where the revenue of that company was close to 50 crore rupees, and we had taken 53% stake committed to them. And this year they have been doing close to 100 crore rupees revenue, doubling this year. And next year also they will be growing 60-70%. So they will be opening 16. They have 16 stores as of now, and they will be opening 10-12 stores in next 15 to 18 months, and going on very well. So from profitability perspective also and top line perspective also, they are doing reasonably good job for us.
Okay. Rishabh, Manoj, been a pleasure speaking. Thank you so much for coming in and speaking with us, giving us that
Thank you very much.
that perspective with regard to
Thank
Bikaji
you.
Foods. And viewers, this sector as a whole has been abuzz, the snacking and food segment. We'll talk more about that, but what we need to do is slip into a very short break. Stay with us here on ET Now, more on the other side.